So today I actually wanted to do two videos. I wanted to talk about two different subjects. So I thought, you know what, best thing to do is just stick them both together. And I'm going to talk about a few stocks that are tanking today, and then also talk about separate, which is NEX or National Express. I know quite a few guys follow that stock, and obviously I'm invested in it, and a little bit of an update because they did bring some information out and talk about that. So yeah, hope this video is useful. It's split into two parts. First part will be about some of the stocks that are tanking, and then the second part will be about National Express. So I hope you enjoy it. We'll take a look. So today the stock market at the moment, as recording this video, it might change by the time you see it, but at the moment the stock market's pretty positive. You see here the index is up a fair amount, and that actually means this week we've actually had a pretty positive week. Normally we have this kind of like lovely uptrend during the week, and then by the time we get to Thursday, which did attempt it yesterday, we'd have a little bit of a sell off, and then Friday then we normally sell off, but it's not happening today. We're having a bit of a rally, as you can see here in the S&P 500, and as well as that in the Nasdaq 100. You can see we're having a bit of a rally here, so a bit of a positive week. However, just before that in this pre-market, it was looking pretty red, and we've had a massive U-turn. The market was really dragged down on Thursday evening when we had Snapchat come out and report numbers, and it's crazy to think Snapchat has become the economic indicator. We've seen this in the last few quarters. For some reason, Snapchat now has come the stock that has decided where the market goes, and Snapchat brought their earnings out and it tanks the market, which was just absolutely insane. So Snapchat itself did go down 28%, and today it is currently down 29% as of recording this video. They came out with numbers which were not too bad on the user growth. I thought the user growth was actually pretty impressive. The problem was attracting advertisers and the revenue growth. The revenue growth was pretty poor, and that was compared to quite easy comps as well. So yeah, the numbers themselves were pretty poor, and because of them being pretty negative, this just knocked on so many stocks. So for example, you had the likes of Google that was down a huge amount. Google today has come back though, and is up 2% as recording this video. Meta was down quite a big amount. Same again, it is having a bit of a pullback as the market opened with the whole market, but that was down like nearly 5%. Pinterest down 6%. I know that this in pre-market at one point was down 9%. I don't know what it is. But Snapchat, whenever they report numbers, seem to always bring Pinterest down the most. And it was pretty frustrating because this happened in the last quarter, and then Pinterest actually came out with pretty positive numbers. But yeah, I don't know what it is, but Snapchat has for some reason come like the leading indicator on a lot of these stocks that deal with advertising. And for some reason, they're always reporting first. Like, can we have Snapchat stop being an indicator for how the economy is going? And also, can we move Snapchat potentially to later in the earnings season, after Google, after Meta, after Pinterest, so it stops bringing the market down? But hey, that's where we're at the moment. So Snapchat coming in with some pretty poor numbers that seem to drag some of the similar stocks and the market down, but we have seen a bit of buying come in at the moment. But that's what's going on in the market at the moment. Snapchat controlling the market. But getting on to National Express, I know a few guys like me to talk about this one. It's a stock that I've been in for a while. It was one of the stocks that I started picking up during the CV times. I looked at the stock and I was like, okay, National Express, you know, it's going to have a few issues at the moment, but longer term, it's got so many contracts and people will go back to, you know, using the transport, and it's got the new contracts to come in. I think this is a really good buy, and at one point I was actually up over 100% on this stock, as you can see here, and yeah, I was doing really well. I still think there was, you know, plenty of upside. You know, obviously it was £4.70 before the CV situation, and it was touching £3, but since around about March time, it's just been caught in a downtrend and it's lost half its value, and now it's kind of back to prices it was near the CV times, and it's basically had most of its gains wiped out. And this is actually really crazy because we had a trading update this week, and the trading update was actually really positive. So you see here, this came out yesterday, 20th of October, and it had the Q3 trading update. And in this trading update, they said that revenue was up 33% year on year. But what was the even important part, which a lot of these travel stocks now get compared to, is how are they doing compared to pre-CV times? And you look here, 2019, 5% ahead of 2019 levels on a consistent currency. So yeah, this stock is now performing above the pre-CV levels, which is obviously pretty impressive. You look at some of the parts of the business here. ALSA up 35%, North America up 11%, UK up 30%. This was the UK was actually one of the slower recovering parts of the business. Germany up 63%. I think people forget how like this isn't just like a UK coach company. They're so diverse in the incomes that the countries that they're in and the incomes they have and the contracts they have as well. They went on to say that the strong UK growth and Spanish coach business as well. Good progress towards meeting full year driver recovery targets, and financial year 2022 results anticipated to be broadly in line with expectations. Now, looking at this, you would think, okay, the business looks to be performing quite well, and the share price basically had no reaction off this update or this trading update. This company is now above 2019 CV levels. It's currently £1.68 before CV times. Whether you go on 2019, it was a £3, £4 stock. So why is this stock not pushing onwards to that kind of £2 well, at least £2 range, but more towards that £3, potentially £4 range? So my feeling here is that even though this was a very good update and there was a lot of information here about how well the business is going and the recovery is very much on its way now with National Express, I think it's because there was a lack of information here. So we did have the half-year report on the 28th of July, which will contain more information than the trading statement. Obviously the trading statement is just how things are going. But I think because on the trading statement there was a lack of more detailed information compared to the half-year report. On the half-year report, we got more of an update, for example, on how EBITDA is going, how operating profit's going, profit before tax, how the EPS is going, which is all fantastic. But I think because there was more numbers on the profit side of it, if that was in the trading update, maybe that's why it would have seen investors a bit more positive on it. Also, there was a lot more mention about the contracts it won, which it won 16 new contracts. So, I mean, maybe it could have made a more big deal, like, we're still progressing on the 16 contracts that we've made, and this is the progress that we have with them. A little bit more of updated on the profit. Also, in the half-year results, they actually mentioned about the dividend here. So it says continue to anticipate reinstating a full year dividend in respect of financial year 2022. So obviously there's plans for that dividend to come back very soon. Now, I think that because on the trading update there wasn't really much information about how the new contracts were going that well, even though it did talk about the obviously the good amounts of revenue they're doing, and also it didn't talk about profit, and maybe because it didn't talk about the dividend again, maybe that's why, even though these were really good results and they're really progressing on 2019 numbers, maybe because there was that lack of information, that's why the results didn't get that much respect as what they probably should have done. But like I said, it is a bit frustrating because they have mentioned all this before, but maybe just that they reconfirmed it would have impressed shareholders a little bit more. And I think looking at National Express, obviously when we go on here, you can see here there's no dividend yield here because obviously they're not paying a dividend yet. There's no P ratio at the moment because they've not done a full year of profit at the moment. I think maybe when we get towards, say, March time and we get the final results, and then the likes of Google, for example, updates the profit, and then we get a P ratio again. I think when we get a bit more completed into the full year, that's might be when we attract in the investors again into National Express, for example. So if we look at the moment here on Simply Wall Street, you'll be able to see here, like, we are forecast to start putting in profit, potentially 53 million in profit, which obviously will put it around 19 times earnings, which isn't too bad. But maybe when we do have the the profit start coming in, that will get shareholders coming back in. Obviously, when we start moving into 2023 and then we have a good amounts of revenue growth, good amounts of profit, potentially analysts at the moment are looking at 94 million in profit. Obviously that puts it down towards the 10 times earnings, which would be very attractive for this business. That could be the key point where we start seeing investors come in. And they did say that they are expecting to hit market expectations, which obviously would be what is here on Simple Wall Street, which is 2.7 billion in revenue, 53 million in profit. And maybe when we get that confirmation on the dividend side of it, that might bring shareholders in at the moment, because at the moment there's no certainty around this dividend yield. But if we do get a clarity on the dividend, that might attract more people in. For example, you can see here Simple Wall Street are forecasting a 5.3% dividend yield, which obviously if you look here is actually slightly below what they were paying pre-CV levels. However, Previously, that was around about a 3% dividend yield, and you can see here now it would be a 5.2% dividend yield. The reason why the dividend yield will be a lot higher, even though it's paying less compared to the pre-CV numbers, is because it's a lot lower share price. At the moment, it's a £1.68, and if you look at pre-CV, it was around about a £3, £4 stock. So that's why it can pay less and have a higher dividend yield. So if it does come in with a 5% dividend yield, and then you're looking at this here, and investors can now start pricing in, well, it's going to probably grow, 5, 6, 7% a year. It's going to be sitting around about 19 times earnings. The jump in profit next year will put it around about 10 times earnings. I'm going to be picking up, a 5% dividend yield. That's going to be attractive to investors. So I think at the moment, National Express is just in an awkward place where I don't think it's attracting maybe investors and Wall Street at the moment, because I think they're waiting for confirmation on more detail than what was in this trading statement of what the profit's going to be at the end of the year. Are they still in line of expectations? What's that dividend yield going to be? And I think when investors get that bit more certainty on the numbers, I mean, if you start talking about this business at 11 times earnings with a 5% dividend yield, this stock is definitely going to be, doing very well. And I generally do think that National Express right now should be somewhere more around I would say £2.30 to £2.50 stock. I think in the longer term, we should see National Express go to that £3 to £4 range before, like it was, before CV levels. And I think the way that it's going to do that is by having a full year's amounts of profit, and having, I think, a 5% dividend yield will definitely start attracting people in. So I think that's the key thing where National Express will kind of attract some shareholders into the business. But overall, at the moment, with the share price being on this dip, and I also think obviously there's a negative environment out there for investors at the moment. I think when this negativity trend does break, and then we get a full year accounts and then more detail on the dividend, I can see this stock doing very well. But for now, I'll just take it as an opportunity to actually accumulate more shares. I'm currently up only 3 or 4% on it, so I will pick a few more shares up because I think the financials they have been bringing out are pretty impressive. And I think when you do look in the longer term, 2 years down the line, and we're talking about profit levels getting close to the before CV times, that dividend yield, I think this is a really attractive investment. So yeah, pretty positive news coming out of National Express at the moment anyway, and I think the share price is undervalued at the moment. So I hope you enjoyed the video. If you could, hit the like button. If you're new, subscribe. If you do want to join this platform that I was using in the videos with the really clear information data and the potential dividend yields that they could be playing in the future, it's Simple Wall Street. Join through a link in the description and you'll get a 14-day free trial. And also on the 4th or 5th day, I think you get a 30% discount as well for the year, which is pretty impressive. And I'll see you on Monday for the next video. If you're on the Patreon, I will drop one more exclusive video on there, which is a stock request video, so keep your eyes open for that. Have a good weekend, and I'll see you in a bit.